Good afternoon, everyone. Please take your seats. We're about ready to start our panel discussion and our session. My name is Aubrey Ruby, and I am a senior fellow at the Africa Center at the Atlantic Council and a founder of Tofino Capital. And this session is going to be talking about mobilizing financial capital, which is at the heart of AIF. So I'd love to invite my panel to the stage. My esteemed panel includes Charles Key, the CEO of Genesis Holdings, Vincent Leguenou, the CEO of the Africa 50 Infrastructure Acceleration Fund, Florie Lazare, the President of Corporate Council on Africa, Oscar Onyema, the CEO of the Nigerian Exchange Group, and Simon Timotori, the CEO of Vista Bank. Please join me on stage. Well, I want to jump in on this very important topic. I really do feel it's core to what AIF is about, which is how do we effectively bring investment into the market? And it's especially important given that we know that there's an infrastructure financing gap in particular of often quoted $90 billion annually that needs to be filled. We know that SMEs struggle to raise money. We know that there is a whole fleet of entrepreneurs out there raising venture capital now. And so I have spent my career working to facilitate investment into Africa, and I found that there are often big constraints in terms of understanding, education, risk perception, et cetera. So we have on this panel representatives of all different types of investment flows. And so I'd like to start with you, Florie. You've spent your career at the nexus of U.S.-Africa investment. What have been some of the challenges you've seen in facilitating investment and encouraging American investors to get involved in the continent?
So I think that one of the biggest issues we face is about perception of risk in Africa, and President Akufo-Addo and many others have already mentioned this. But clearly, the reality on the ground in Africa is one where there are a lot of opportunities for people to invest, high rates of return, and we need to close that gap between the perception of risk in Africa basis the reality. The second thing we need to do, though, is to deal with risk mitigation. What are the tools and the platforms that we can use that would make investors in Africa feel that it was less of a risk? And there's real risk, but then, you know, how do you address that real risk?
And what kind of platforms have we seen develop in the last couple of years?
Well, one that I like is one that is from the Millennium Challenge Corporation of the U.S., where it's blended finance. I think blended finance is really, it covers many things, and there are lots of ways to do blended finance, but I think that when you have government resources going in, many of you may know the Millennium Challenge Corporation has put in $9 billion into 25 African countries since being founded. When you put the private sector with that money, then basically you're leveraging the fact that this is government money. It's a grant, it's not a loan, it doesn't increase Africa's debt. And as a private sector company, whether you're US or otherwise, because you know many companies are doing that, when you bring those two together. And then I would mention one other thing. There is a new initiative that MCC has done with Africa 50, which is the Millennium Impact Infrastructure Fund for Africa. And again, this is an accelerator fund, and what they're doing is crowding in private sector investment to leverage with MCC investment. So that's just one example. There's so many we could talk about.
No, I think that's good. I think bringing in specific examples is really our aim. And maybe, Vincent, I'll come to you. From this perspective, I mean, we know the persistent financing gap in infrastructure, and Africa 50 was in part set up for that. And you have a fund that has been kind of seeded and accelerated within that context. So tell us a little bit of how it works and how it can leverage that platform to bring in more capital.
Merci Aubry. Africa 50 effectivement a été lancé il y a 5 ou 6 ans à l'initiative de la Banque africaine de développement pour participer à la réduction du déficit d'infrastructures sur le continent africain avec 2 piliers essentiels, Africa 50 Project Development qui fait du Early Stage Equity, qui est un instrument absolument critique pour lancer les projets et les amener du concept à la bancabilité. Le deuxième pilier, c'est Africa 50 Project Finance qui prend des participations en capital minoritaires et sur des tickets inférieurs à 40 millions de dollars. Le troisième pilier, c'est le Africa Infrastructure Acceleration Fund que je dirige et que nous sommes en train de lancer. Donc je suis dans la phase de mobilisation du capital. Donc la discussion que nous avons aujourd'hui prend tout son sens pour moi en ce moment. L'objectif est de
maybe you're making news as well. Are you announcing it at this forum?
Donc l'objectif est de lever 500 millions de dollars et nous espérons arriver à un premier closing d'ici la fin de l'année. Donc au-delà du sponsorship d'Africa 50, nous allons lever de l'argent auprès d'investisseurs institutionnels, africains ou internationaux.
And what's been the appetite so far as you've gone out? I mean, I'm sure that I know you're early stages, but you've had some initial conversations, and I assume that Africa 50's role is a risk mitigator as we're talking here, because the stakeholders of Africa 50 are African governments themselves, deep relationships on the continent, and I'm sure that makes others feel more comfortable.
La stratégie de levée de fonds repose sur les investisseurs institutionnels africains. Donc nous commençons par lever des fonds auprès des investisseurs du continent, du nord, du sud, de l'est, de l'ouest. Il y a un très bon écho jusqu'à présent, donc ça nous permet d'envisager un premier closing aux alentours de 250-300 millions de dollars, donc 50 à 60% la taille cible du fonds. Et la raison est simple, si les investisseurs africains ne croient pas dans l'investissement dans les infrastructures sur le continent, qui va y croire ? Et ensuite, nous ouvrirons à des investisseurs internationaux, nord-américains, européens, asiatiques, etc. Donc, pour l'instant, très bon retour des investisseurs.
No, I completely agree. You have to bring in local money as well. And when I think about the institutional investment landscape, you have so much dry powder sitting there. You have trillions sitting in funds, 10 trillion last count that I saw in bonds that were negative yield. And you think, why isn't it moving? And when I talk to a lot of those investors, they will say they have exposure, and Oscar, I want to come to you, on the public sector side. So through the stock exchanges, they're invested in African markets, but less so on the private and alternative asset side. So what trends are you seeing in the stock exchange space in African markets? And can stock exchanges and capital markets writ large be the platform to bring in trillions?
Thank you very much, Aubrey. I should start by saying that, if you look at the global equity market capitalization, it's about $122 trillion. And if you look at all the markets in Africa, right, about 28, 29 stock exchanges covering 38 countries, the total market cap, equity market cap, is $2 trillion. So it's a very small percentage of what is going on globally. And there's significant opportunity for growth, especially given some of the policies and structural changes that are being made at policy level, at regulatory level, and at exchange level to begin to crowd in that kind of funding. But suffice it to say that we've seen significant improvement in the equity space across Africa. We've seen introduction of electronic trading in a lot of the markets. In fact, electronic IPOs. If you take the Nigerian market, we just IPO'd MTN, which is the largest telecom company, I think, on the continent. And it was all electronic, right? And we brought in about 122 1,000 new investors, young investors that were interacting in electronic way.
Were they both local and diaspora?
Mostly local, right? If you look at, on the fixed income side, we're seeing a lot more institutional play there, but we introduced the Nigerian government retail bond, which has started getting very interesting because you can, put in a very small amount of money, and they release these things every month. So it's beginning to get traction. So there are opportunities for participation in the continent. It's not as large as what you will see globally, and I think there is a trust issue, there's an awareness issue. A lot of, if I digress a little bit and just look at Nigerian banking, a lot of the international banks have no idea how far behind they are in terms of transfers, payment systems, efficiencies, automation.
But in many ways, that's making opportunity for entrepreneurs, right?
Correct.
Because you see so much activity happening in the payment space and digitization of payments for that reason.
Correct. Yeah. So you have that, and then another reason why I think you're not seeing a lot of those flows coming into Africa, even though you have negative yield in the fixed income space, is just the environment, right? So if you look at ease of doing business report from the World Bank, you only have 2 African countries in the top 50, right? Rwanda and Mauritius. So we need to do more to bring in more African countries, and I think we have to be deliberate about it. There are certain things they're looking for. Ease of goods and services, ease of money flows, how easy is it to register a company, and things like that. So we can target those areas and drive reform to bring in more African countries to the top of that list.
Yeah, but I think that there are, that's a long-term process, institutional improvement and environment, and no one waited to invest in the United States until our institutions were developed, and our institutions are far from perfect, right? If investors had waited, for a century until everything was done, no one would have made any progress. And so I think this issue, there's so many things to be done now, and one of the assets is the diaspora in terms of investment. That's part of the reasons why I was asking. And Simon, I want to bring you in on that. You live between the U.S. and West Africa, and you've seen trends in that space, and many Africans going back and putting their money to work.
No, that's correct. I think, and I'll piggyback on what Vincent was saying earlier. Obviously, we got to count on ourselves, and ourselves meaning Africans living in Africa and also African living in the diaspora. At the end of the day, as you mentioned, you cannot wait for perfection when other countries like the US have negative yield and count on those guys to come and invest in us. So the capital is here in Africa. Just look at the pension fund. The sheer amount of liquidity that the pension funds, African pension fund are sitting on. The US capital market didn't develop himself on his own. It's the pension fund that fueled the capital market in the US.
But how do we unlock it? I mean, last conversation I had in Nigeria, for example, is Nigerian pension funds can invest, I think by law, up to 5% in private equity, but it was less than 0.5% the amount that was actually being done. And many times they'll say there's a gap in understanding the products, or what is the constraint there?
I don't think it's a lack of understanding the product. I think Oscar Onyema just touched on the point. It's a change in policy and regulatory perspective to unlock the future. We're talking about the AFCTA today. How can you achieve the AFCTA without changing policies, how those pension funds that are sitting on billions of dollars can invest across Africa to capitalize on the opportunities that we talked about in the AFCTA? To the contrary, what we're seeing is those pension funds are willing to place their hard-earned dollars that our fathers and mom have saved overseas, in OECD's banks, in the US, for instance. Why can't those funds be placed, for instance, with regional banks, like Afrexim Bank, the AFDB,
That offers that diversification.
that offer that diversification precisely. Why can those funds be used for products that are offered by the stock exchange market in Nigeria, by the BRVM here in Côte d'Ivoire? I mean, you need liquidity to fuel the stock exchange market. And if the pension funds do not play their role as a catalyst, obviously we will not win. The banks also, locally in Africa, can play a role in that
Yes,
sector.
tell the audience about Vista Bank and what you're doing.
So, you know, I think Vincent mentioned one of the things that's critical to the acceleration fund that they're trying to raise is first try to target, African institutional investors. We will participate in what they do in the fundraise. I think many of the African banks, if we want to accelerate our own development, we need to control our own narrative. So if we need to walk the walk and talk the talk. So we need to put our money where our mouth is. Every African institution, every African banks should invest in the Africa 50 Acceleration Fund. This is how we can develop Africa.
Wow, Vincent, are you paying this guy?
I like that.
Do you want to come in, Vincent? Then we'll come to Charles.
No, I think what we're facing, ce qu'on voit dans le domaine des infrastructures, c'est une absence de deal flow suffisant, d'une part, et des deals de qualité. Donc il faut qu'on corrige ces éléments-là. Il faut qu'on puisse démontrer, avec un fonds comme le nôtre, qu'on peut trouver suffisamment de transactions dans un calendrier qui est pertinent pour le fonds. Un fonds a un cycle, une période d'investissement de 5 ans. Donc on ne peut pas se permettre de faire du développement pur, parce que sinon on risque d'être hors délai, on risque de sortir de la période d'investissement et on ne pourra pas déployer le capital qu'on a levé. Donc il faut trouver le bon mix de deals dans le pipeline qu'on peut présenter aux investisseurs. Et puis, il faut s'assurer qu'on a de la visibilité rapidement sur les cash flows. Donc, on soit proche du financial close. On peut prendre le risque de construction, pas le risque de développement. Et puis, on va aussi diversifier et accompagner des entreprises qui sont déjà existantes et qu'on va faire passer à l'échelle. Ce sera du capital développement pour financer leurs expansions. Donc, un profil de risque sensiblement différent. Quand on aura suffisamment d'exemples de fonds qui ont bien réussi, on va nécessairement attirer davantage d'investisseurs pour le futur. Et c'est ça le cercle vertueux. Et quand on aura beaucoup de success stories, eh bien, la bonne nouvelle, c'est qu'on aura en plus un coût du capital qui va baisser. Mais ça viendra avec le temps.
And Charles, I'd love to hear from you on this topic.
Alors moi, j'avoue que je suis toujours un peu amusé de ces discussions sur les mobilisations de financement parce qu'en réalité, et quand on y regarde bien, on a en Afrique largement ce qu'il faut pour financer nos économies. Et je vais donner 2-3 exemples pour être très précis. Vous savez, il y a un de nos chefs d'État qui a dit il y a quelques jours encore, l'argent n'aime pas le bruit. D'accord ? Et à juste titre, l'argent n'aime pas le bruit. Donc, quand on cherche à attirer des capitaux, il faut s'assurer qu'on crée soi-même en Afrique le cadre macroéconomique nécessaire pour que les choses fonctionnent. Or, on a un sujet sur lequel on ne revient pas souvent, mais qui, à mon avis, est le premier par lequel on devrait prendre le sujet, c'est celui de nos déficits budgétaires dans chacun de nos pays. D'accord ? Un déficit, par sa nature même, il doit être financé. Et comment est-ce qu'on le finance ? Par de la dette essentiellement.
Exports, yeah.
Et quelle est la nature de la dette qu'on va chercher ? De la dette extérieure, libellée en général en dollars. Dans un environnement où vous avez de l'inflation, dans un environnement où vous avez des hausses de taux directeurs pratiquement tous les mois, dans un environnement où vous avez les disruptions que vous connaissez aujourd'hui sur les supply chains, comment ne pas enfin se rendre compte qu'il y a quelque chose de fondamental qui doit changer dans nos États africains, c'est celui de commencer à être un peu plus discipliné sur la façon dont on gère les ressources publiques. D'où nous vient-il qu'il faille constamment être obligé de faire du déficit ? Donc, première chose, adressons la question du poids de nos États sur nos économies. Déficit moyen à l'échelle de l'Afrique, par les temps qui courent, 6-7%, on est en train d'aller tout droit vers 2 chiffres. 2 000 milliards de dollars, faites le calcul, si vous baissez les déficits budgétaires en Afrique de 3%, c'est entre 50 et 60 milliards de dollars que vous économisez. Si vous les faites disparaître sur une année, c'est 100 milliards de dollars. C'est exactement le chiffre dont on parle tous les ans du gap de financement dont on a besoin au niveau des infrastructures. On a déjà une solution. D'accord? Deuxièmement, et pour embrayer sur la question de l'épargne, effectivement aujourd'hui, beaucoup de nos institutions ont de l'épargne. Mais quand vous prenez l'épargne publique dans la quasi-totalité de nos pays, à l'échelle de l'Afrique, on parle de 25% à peu près du PIB. Là aussi, pareil, faites un calcul rapide. Essayez d'accroître tout simplement le taux d'épargne de 5 à 10% par an, ça change complètement la dynamique dans laquelle on est. 10%, c'est 200 milliards de dollars qu'on met immédiatement à la disposition de l'Afrique pour justement adresser les questions de financement. Donc, en réalité, on a les ressources. Il faut qu'on soit juste un peu plus discipliné et surtout qu'on fasse les réformes nécessaires pour que l'épargne publique africaine se mette à la disposition du financement des infrastructures africaines.
Yeah, I guess my question would be, do we have the right intermediaries? Because I think sometimes in African markets and economic development, there are too many middlemen in some sectors, which we've all seen, and then too few in others, particularly where there's trust gaps, et cetera. If I go back to like the pension funds, you know, in the US, for example, New York Common Fund manages $230 billion. And they do that with 35 investment professionals. They do that, it's possible because they have consultants, they have a whole structure of intermediation that exists to get the money to move to where it makes sense in theory, because we know it's sitting there in many times. But I know, Simon, you want to come in. Do we have that intermediation, and what's missing in the gap? Otherwise, why would we not do more of this?
Look, we have it, right? Look, we have Africa 50 now that's set up. Mm-hmm. We have the Africa 50 Acceleration Fund. These are professionals that managed fund before, that understand, and they're investment professional, that they brought in now, not bureaucrat, not civil servant, but investment professional to manage an acceleration fund. You have, AFC that does it. You have Afreximbank that does it to some extent. Some of the regional players are doing it. I think the missing gap, Vincent was alluding to it, I think to Shalki's point on saving ultimately is what fuel the pension funds. So the pension funds, so it's a ripple effect. The more saving you have, the more pension funds have liquidity, the more role they need to play in fueling the capital market. At the end of the day, what Vincent was alluding to is deal, right? Deal readiness. All of our government have a national economic development plan. So we can't look simply to the government to finance all of our infrastructure. I think that goes to the point that I was talking about deficit. Why don't we look to the private sector? And the government gives you the holy grail. This is where I want to develop my infrastructure in energy, roads, water, and things like that. What is missing is credible, bankable transaction. Yeah. So if you can have a feasibility study, and I think a lot of the banks now have a liquidity pool to do feasibility study, like the Afreximbank has a preparation facility, AFDB has the same thing, DFC has the United States has USTDA that provide financing for feasibility study. I think we need to widen the knowledge and broaden the spectrum about those feasibility studies so that the private sector, the government, can tap into it to make the project more bankable, so that they make the job easier for Africa 50, for the banks like Vista Bank to come in and provide financing, for the stock exchange market to come and promote it, see if it's qualified directly for an IPO on the BRVM or in the Nigerian stock exchange to tap into the capital market, or even do a pension fund play. Yeah. Precisely.
So 2 follow-up questions. I mean, African banks today do buy government paper. I mean, they are lending, money is raised locally. And so I see, Oscar, you guys are shaking your head. So what is the gap there? I mean, there is finance raised locally. In fact, sometimes the criticism of African banks is that they do so much of that they don't do a lot of retail banking, right? And then the other question I have then, follow-up after we take that one, would be for Vincent, which is, we've talked about this bankability problem for so long, and Africa 50 has the project development facility. Others do. yet it doesn't seem to be, we're not making a dent in the bankability problem. So is it because that, you still need sponsors and sponsors need financing? Or, what is it? So let's start on the African banks and what is the gap? I see Charles wants to come in, and then we'll go to Vincent. Go ahead, Charles.
Okay.
Go ahead, Oscar first. Go ahead.
No, I just wanted to say something about the pension funds. I don't think a lot of the countries in Africa have actually transitioned to contributory pension schemes.
Right.
And it all starts from there. So most of the pension setup frameworks that you have on the continent are not funded because they are defined benefit plans. When you've made that transition, you can quickly accumulate investable funds. And if you take the Nigerian example, the pension funds have about $28 billion. Most of that money has gone towards financing the government deficit that we're talking about, right? And so there's even a concentration risk. But that is where you're risk-free, So I think there's a need for some risk-taking. There's a need for investing in long-duration type opportunities that are properly suited to the demographics that we're talking about here. You still have 20, 30 years of investment duration. And last point I wanted to make is that the intermediaries are not as sophisticated as we actually need them to be. And a lot of countries will actually benefit from bringing in big global players to revolutionize the intermediary space in terms of reach, in terms of capacity to fund transactions, and in terms of just understanding the different structures that are available there that can be deployed.
Yeah. Charles, I know you want to come in there.
Oui, sur la question du système bancaire, je crois qu'il faut dire les choses de façon peut-être un peu brutale, mais un peu claire. Le secteur bancaire africain ne s'est pas dimensionné pour être à la hauteur des enjeux de financement du continent africain.
But it's one of the most profitable in the world.
Justement.
Some of the African banks are some of the most profitable banks in the world.
Precisely. Okay? Mais je vais continuer en français.
Yeah.
Vous savez, je vais donner un exemple simple. Dans le secteur bancaire, small is not beautiful when it comes to banks, right? How would I say that? Take Nigeria.
Yeah.
400 billion GDP. Not even 30 banks, right?
And if you go outside of Lagos, outside of VI, try to find a bank.
You take the whole of UMOR, okay? And in particular Côte d'Ivoire, which I know, $40 billion GDP, you have 30 banks. Now, let's face it. How do you want small banks to finance large projects when they're not properly capitalized? And the good thing is, since the crisis in 2008, it is now clear the importance of capital within the banking industry. So if we want the banking sector to be structured the way it should be, to be commensurate to the ambition of financing African infrastructure, for instance, let us restructure that industry to be able to be well capitalized and therefore have large banks in most of the countries. That's one. And second, the fact that most of these regions have now come together to have common, either monetary zones, economic zones, etc. That regional dimension should actually be a factor that makes banks scalable, which is one thing that is not said enough, which should be one of the solutions, to
Yeah, it's a structural problem we always deal with attracting investment in Africa, and Flori knows this and others. I mean, a statistic that always blows my mind is, what percent of the world live in small landlocked countries? 3%. Over 30% of Africans live in small landlocked countries. So you're dealing with a lot of very small economies, very small countries. Of course, you can't do an average. Averages don't make sense you're going to average Nigeria with Botswana, and get, a 100 million person market. You're not going to, in terms of population, you're not going to get averages don't make sense. And so these small markets subscale is a big challenge, and it continues to be one. And I think that's why many companies, and I want to bring Flori in, are very excited about the regional integration process, because to them it just says larger market, bigger scale.
Right, but I just wanted to also talk about something that is, a key factor in Africa as well, which is that, a lot of the economy runs on cash, and a lot of people are unbanked. And so in terms of the banks having the access to the savings to GDP has been declining in Africa for quite some time. And if you compare what's happened in Africa, which has been declining over the last 20 years or so, and you look at China, that's now I think something like 47% savings to GDP. So the combination of informal economy, informal businesses not fully linked to the banking system, and then you look at what that means for the banks as well. I think that it's a systemic issue that we have to look at more broadly. We just can't look at the financial institutions. We have to look kind of more broadly at what's happening in Africa. And then I just want to sort of circle back. There are a lot of reasons why people should be investing in Africa, especially now after the COVID pandemic and the breakdown in supply chains. This is really a great time to look at Africa as a manufacturing base and to bring African producers into those value chains, those supply chains. And I just use one example. Prior to COVID, if you had said that a company should produce an mRNA vaccine in Africa, people would have looked at you and said, that's ridiculous. That's not going to happen, Flori. But lo and behold, pandemic happened. Africans stepped up, ready to do what probably they could have done a long time ago. And now you have Africans that are producing. And I just see this across all these value chains in Africa, where today Africa has, 2.5% of global trade, has 5.2% of global FDI. And so, really, when you look at Africa's potential, where it should be using its own strategic minerals to produce electric batteries for electric vehicles. That shouldn't be shipped somewhere else. I was just talking to someone over lunch about how almost 70% of Africa's cashews go to Vietnam and India for processing. And people tell me that it's more profitable to do that than to process it in Africa. This is so we should be saying, let's stop that right now. Let's look to how we can incentivize investment into manufacturing in Africa, use the capital that these folks here are talking about, and it's great that we're doing that. And then, I just have to commend AIF for curating projects that are bankable, because we hear two things. We hear people saying, there's not enough capital going into infrastructure in Africa, going into projects in Africa, but then you hear people say, oh no, there's capital out there. There just aren't enough bankable projects. And so I think that this is the way that we can bring those two, quote unquote, realities together. How do we get people to actually invest in Africa, especially in manufacturing, and especially now that you have a continental market? All those small landlocked markets that, people were like, well, I don't really want to invest in that one small country here. Even Botswana, that's well rated on the stock exchange. You can't get people to go into a country with 1.8 million people, right? But I think that this is the time where we can actually change that and have a different type of narrative about investing in Africa.
Vincent, you want to come in on the bankable?
Charles and I tried to promote French as an international language, but I'm afraid we're about to fail, right? We tried. Where are the bankable projects? Two major issues. Absence of a proper regulatory framework in most instances. We need, when we invest in a country, to have long-term visibility on the regulatory framework. We need national consensus on a infrastructure master plan so that all stakeholders have visibility over the long term and things and priorities don't change when a new government steps in or when a new minister is appointed. How many times have we seen that? You spend time, money, efforts developing a project, new minister comes in, change of priorities, all that is waste, right? So that's critical. The other aspect is the absence of capacity sometimes. Government or PPP specialized units capable of negotiating contracts which are bankable. That's fundamental. Capable of monitoring the projects over their lives, which is long term. So we need to fix those two sort of issues, and DFIs have a role to play. At Africa 50, there is one example we kind of like very much, and that's built on positive and success story. This is in Egypt. This is the Benban Solar Park.
Yeah,
I don't know if you're familiar with that one. 37 square kilometers of solar park. You can see it from the space, you know, because of its size. And it was developed in a very smart way, bringing the DFIs early on, and they have helped the government structure and negotiate and design contracts which were bankable, PPAs and whatnot. That's point number one. The government of Egypt was advised not to focus aggressively on tariffs, but more on timing of execution, which is fundamental. Number three, sharing infrastructure, roads, transmission lines, substations, common to all developers. With that framework in place, they've been able to develop and attract $4 billion. 30 international developers have stepped in and mobilized that capital, and Africa 50 has invested and helped develop one of these projects. And that we're talking about 1.5 gigawatts, which is huge, and it serves 1 million clients in Egypt with renewable energy. That's a very, very good example of something which worked. And by the way, the project in which Africa 50 has invested has just refinanced its debt with the emission of a green bond. So lowering, again, the cost of capital. So this is the type of situation we want to see more on the continent. And DFIs, again, can play a real important role in putting in place the right framework, advising governments to get there.
Yeah, I guess I would want to be a little contrarian, and sometimes I think we focus so much on governments and governments having to do a lot, and I think that's very true with certain kinds of infrastructure. Like the whole planet, rural roads have been built by government because just the business model of rural roads doesn't necessarily make sense. But I think about the railroads in the US being built more or less by the private sector. I think about the Dangote refinery, for example. You know, where can we get the African private sector or global private sector to do more in infrastructure instead of having to necessarily wait for master plans to come? You know, I think if we all waited for the Nigerian gas master plan to finally be executed, it might be a long time, right? So these type of things you got to do with government, but you also got to get moving at the same time. So I just wanted to see if there's any thoughts on examples of that have worked well that we could scale up.
I can take it up. And I do agree with you. I mean, that will address the deficit that Charles is talking about, but also having project being well prepared, as Vincent was alluding to. I think we need to encourage the private sector to do more in that sense. You have, on the railroad side, for instance, an entity called Taylor Group. You know, its chairman and founder and CEO, Mr. Rani Ntuli, is here attending, and the IAF. You know, this, it's South African. This is what we need to encourage more. They're doing transactions in Ghana. They're looking at deals in Ethiopia. They try to link Burkina Faso and Ghana. Burkina Faso is a landlocked country. And they're looking at a number of projects in the southern part of Africa. So I think we do have the solutions. And when we look at all of our national economic development plan, where our government lays out their infrastructure needs in energy, in water, in roads, and things like that, there's a lot of people in the private sector in Africa that can play that role, that can do that. We don't need to go overseas to find someone else, a Japanese or a Chinese person, to come and do on our behalf. The liquidity is also there. We also have the project preparation facility. All I'm trying to say is there's a lot of a piece of the puzzle that we have based on what Vincent just outlined that made the project in Egypt successful that can be replicated elsewhere else.
Yeah.
This project in Egypt was done by Egyptians.
And the answer at African markets is never or, right? It's you need this and this and this and this. You need all of them investing, just like you need, financiers of infrastructure, external and local. I want to come to I think Vincent mentioned green bonds and bond issuance as a way to raise capital and mobilize capital. Any thoughts on that, Oscar? We haven't seen great usage yet in African markets, though Nigeria has and South Africa has, but not many have been issued.
Yeah, I think we worked on the first sovereign green bond. I'm certain in Africa, but I'm not sure globally. And it was to finance climate-friendly projects. It was to help begin to create the yield curve that will allow private sector firms to begin to look at green bonds, meeting all the standards so that you don't have green washing. And where are we today? We've had 2 sovereign green bonds issued. We've had a bank, Access Bank, issue a green bond to provide a war chest that is dedicated towards green finance and climate finance. And we've had a North-South Power, issue a green bond to support their energy transition programs around providing power to Nigeria. So those are examples, and now we have a good yield curve. We're working with a number of other issuers for new rounds, including the sovereign as well. So I think that there's a lot of work that can be done in the whole sustainable finance space, not just green bonds, but
not just a lot of work. There's
social
going to be a lot of
bonds.
money going into it.
Well, you can get the money once you've convinced people about the benefits of issuing these specialized bonds. So why should I take the extra effort to certify my projects green and ring-fence use of proceeds and provide additional transparency when I can just go to the normal bond market and get it? So there's still a lot of education to do there. And we've also partnered with the Luxembourg Stock Exchange to do dual listings of green bonds, because they're the largest green bond market in the world. And as you know, globally, there's increasing funding for green projects and things like that. Yeah. That is not true locally. So we're trying to plug into the global financial flows, and that is why we went into that partnership. So the Access Bank bond, for example, is dually listed between us and Luxembourg.
One of the reasons I was very excited to moderate this panel is because you almost all represent very different asset classes and space. And so with our last few minutes here, I just kind of want to go down the line and say something that's giving you optimism, or it's exciting in your space, and look for the future. What can we see? So maybe with Vincent, with you in infrastructure,
sure.
What's most interesting these days?
What gives me hope is the pipeline we have developed, even though we've not reached a first close. The good news is that Africa 50 has a good balance sheet, and they will warehouse any deal that would come before we close the fund. And the pipeline we have developed is really diverse across the continent, across sectors. one sector in particular is worth highlighting, that's the digital space,
Me too.
right? And we know that during the pandemic, 25% of the African businesses have accelerated the use of digital solutions, right? We know that in order to provide universal, affordable access to quality broadband by 2030, we'll have to connect 1 billion new subscribers. Tremendous opportunities in that space. All the telecom value chain, MNOs, service providers like ESCO.
Not to mention the satellite options that are coming online now.
Satellite, data centers, etc. This is a sector I'm really excited about. You too, I guess.
I share that excitement,
Yeah,
yes. And all the entrepreneurs that are building on the back, and the fact that in the informal market, the problem with it is small is not beautiful. They operate suboptimally because they're small with information asymmetries, all those things. Digitization will change all of that. Companies can scale fast. Charles?
Oui, moi je voudrais qu'on ne se sépare pas tout à l'heure en ayant l'impression que lorsqu'on parle de mobilisation de financement, ça ne concerne que des infrastructures et des grands projets. On est tous d'accord pour dire qu'en Afrique, les PME, formelles ou informelles, représentent quand même entre 70 et 80% de nos économies, et on ne parle pas suffisamment d'elles quand on adresse les problématiques de financement. C'est vrai, on s'attend à ce qu'elles trouvent des solutions auprès des banques, auprès de certains fonds de private equity. Mais en réalité, quand une PME a besoin de l'équivalent de 100 000 $ ou 100 000 €, ou peut-être même moins d'1 million de dollars, à qui est-ce qu'elle s'adresse? Et ça, c'est un espace qui a été laissé pratiquement vacant. Et c'est la raison pour laquelle des institutions comme les nôtres ont décidé depuis l'année dernière de s'insérer dans ce petit créneau-là et de voir ce qu'on peut faire. Cette année, on a créé un fonds dédié, par exemple, au secteur de l'hôtellerie, d'accord, avec la particularité d'être un fonds local, d'accord, pour faire des projets locaux, avec des acteurs de préférence locaux. Et on espère que d'ici à l'année prochaine, donc le premier investissement sur lequel nous sommes verra le jour. En plus de cela, on a créé un deuxième instrument qu'on a appelé Genesis Fund and Asset Management, qui justement apporte de l'equity justement à des tout petits projets, entre l'équivalent de 10 000 € jusqu'à 200 300 000 €. On va signer la semaine prochaine notre premier investissement. C'est pour dire que justement, en parlant de choses qui nous donnent de l'espoir, c'est qu'il y a aujourd'hui suffisamment d'intelligence dans ce marché pour que, quand elles se mettent en position d'être complémentaires les unes des autres, on trouve de vraies solutions pour les questions de financement de nos économies.
And those SMEs will grow and hopefully eventually be capital markets players. So, Oscar, what's exciting in the field of capital markets?
So I think we would all agree that a lot of the big problems in the globe, what I call the wicked problems, are exacerbated in Africa, right? So access to education, good drinking water, health, things like that, social challenges. And so what I'm really excited about is that whilst your traditional finance as represented by capital markets may not be perfectly suited for addressing some of these issues, with blended finance, we're now finding that there's a whole spectrum of financing out there, that from philanthropy to grants to catalytic capital all the way through impact investing to capital markets, and they all have a role to play. And the kind of returns they want on the same project are not necessarily the same. So there is opportunity, and now the kind of work we are then doing is scaling, right? So once you've had proof of concept, you've provided solution to a catalytic finance for a particular thesis, and then you want to scale, you can bring it to the capital markets. And yes, we would demand for full financial returns. whereas the people in impact investing, for example, may be looking for impact and not necessarily the complete financial returns.
Yeah.
So that linkage is very exciting to me. And,
Yeah, the
and
diversity of desires in the capital stack is very powerful.
Right.
Simon?
Look, I'm excited because everyone is excited about Africa, right? So, and as an investor here, as a permanent capital investor in Africa, you know, through Lilium and also through our bank, Vista Bank, you know, we're excited about some of the opportunities that we do see. You know, I sit in the board of U.S. Chamber of Commerce, also member of CCA, and I think one of the things that we're stressing out, you know, as African, but also wearing the U.S. hat, is the sheer number of opportunities and the amount of capital that we're leveraging outside of Africa from the U.S. to the PGII, which is about $600 billion for infrastructure, $200 billion being contributed by the U.S. Looking at other sectors like healthcare, which is, you know, very important for development. Education is one thing that we're looking at. You know, food security, all of which is translating to the pipeline that we're accumulating through our banks. Ultimately, that's how we're going to deliver development, right? You know, put your money where your mouth is and try to finance those transactions. So that's what I'm excited about. Our pipeline is growing. We're doing more. We'll continue to do more in the continent. And we'll continue to leverage our platform to increase the flow of funds from the U.S., but also inside Africa to finance our own development.
Yeah, I think the challenge, of course, is some of the pledges around the infrastructure funds and other things that the U.S. is whether they ever materialize. I've long argued, and Flory knows, that the U.S. should focus on things we're good at, right? And we're seeing that in some of the Google investments, for example. They see all the, 1 million Africans turn 18 every month. So, that is a digital generation, right? The digital natives, and that is a market, and I think we'll see that. But other sectors we've been less active in, right? And, if you look at the top 10 infrastructure companies in the world, construction companies, 7 of the 10 largest ones are Chinese now. So the U.S. hasn't done as much in this space just because it's not what we've been doing in our own country. And so it'll be interesting to see at the Leaders Summit, and I know Flory will say a couple things on looking forward, what kind of investments coming out. I do know there's so much interest in the venture space, so Flory.
Well, I think the two exciting things that are sort of on opposite ends of a spectrum, and I think we'll see more of this, and speaking from the U.S. perspective, I think all of you know Corporate Council on Africa has both U.S. and African companies as members, multinationals as well as SMEs. But on the higher end, I'm excited about institutional investors looking at Africa maybe for the first time in some cases, or with a fresh look. I forget what the number is for total sort of capital available for institutional investors globally, 100 trillion or whatever it is, and the U.S. is 45% of that. That's the number I remember. And so my view is that on that end, we've got to get those folks who have those kinds of resources to come and partner with all the people here who they should be partnering with. There's that. The other side that I'm excited about is linking, Americans, SMEs with African SMEs and entrepreneurs. I'm excited about what the diaspora can do. African American, minority-owned, diaspora-owned businesses in the U.S., some small and some big, high net worth individuals in the U.S., whether they're in sports or creative arts or whatever they may be. But that connection is one that I think really needs to be focused on as well. There's a natural bond between people like me in the U.S. and Africa, and other folks from around the world. They've taken better advantage of their diaspora than Africa has taken advantage of its diaspora, which is all over the world, not just in the U.S. So I'm excited about that, and I'll just end by saying that I think that during the U.S.-Africa Business Summit, the U.S.-Africa Leaders Summit, and the Business Forum that will take place as a part of the Leaders Summit. This is the first time an Africa Leaders Summit is happening since 2014, when President Obama did one. And so I'm very excited and proud that the Biden-Harris administration decided that, yes, we need to meet with African leaders again. We're hoping there'll be many of them and many African businesses, as well as American businesses and companies and CEOs and executives who will converge on Washington, December 13th to the 15th, and be a part of that, because I think a lot can and should come out of that.
Well, I'm glad you brought up the global diaspora, because one of the reasons we're doing this is we're streaming it, and so we can reach so many who are not in the room today and not in Abidjan with this same message, story, conversation. So join me in thanking my esteemed panel for their time this afternoon, and we look forward to meeting them at the rest of the programming.